Hi everyone, welcome. Comparison rates were designed to help you choose and compare loans on the basis of cost. It reduces to a single interest rate the interest rate and fees associated with the loan. It takes into account things like how much you've borrowed, the term of the loan, the interest rate charged, how often you make repayments, and any fees and charges ascertainable at the time you took the loan out. So you might have an advertised rate of 6% and a comparison rate of 6.8%. So what does this really mean and how can you use it? Well, let's go through some examples of how you might be able to use a comparison rate to make some initial assessment about a loan. If the advertised rate and the comparison rate are fairly close together, it's probably telling you that interest makes up the bulk of the cost of the loan and that there are very few fees associated with it. If the comparison rate is much higher than the advertised rate, then this could mean a number of things. The first thing it could mean is that the advertised rate is a discounted rate that's going to go up after, say, 1, 2 or 3 years. It could mean that the advertised rate is a fixed rate and the lender believes that the variable rates are going to increase at the end of the fixed rate term. Or it could mean that there are lots of fees and charges associated with the loan, particularly upfront fees and charges. You could also have a situation where the comparison rate is less than the advertised rate. And you may be wondering, well, how is that possible? Well, it is possible when you look at fixed rate loans. So what that's probably telling you is that the lenders believe that at the end of the fixed rate term, variable rates are going to be lower than the fixed rate, and that brings the overall cost of the loan down. So that gives you some fairly good broad general ideas of how to use it, but you need to bear in mind that there are some significant limitations. The first one is that it's based on a lot of assumptions, particularly regarding the direction of future interest rates. So you take the fixed rate example, for example, lenders might be saying that future interest rates are going to come down, but nobody really knows. I mean, it's hard enough to predict rates 6 months in advance, let alone 6 or 10 years in advance. So if those assumptions prove to be wrong, then the comparison rate could be very, very different. The other thing is that comparison rates are calculated on a contracted term of the loan. So if you borrow for 25 years, the comparison rate will be calculated on 25 years. The reality is that most loans last for between 5 and 7 years. So if you calculated the true cost on that time frame, you'd find that the comparison rate would be a lot higher. The other really important thing is that not all fees and charges are included in the comparison rate. And the really big one that's excluded is early settlement fees on fixed rate loans. Now, these fees can be really significant and cost tens of thousands of dollars, and they're not included in the comparison rate, so you really need to be careful about that. Other fees aren't included are things like government charges. And finally, and importantly, comparison rates don't take into account the features of the loan that may make a really big difference to the attractiveness of the loan. So they don't take into account things like whether you can make extra repayments or lump sum repayments or drawdowns or offsets, these sorts of things, which you really do need to consider. So in summary, comparison rates, look, they're useful as a starting point, but make sure that you understand the assumptions that underlie their calculation. And importantly, talk to your lender and get him to explain all the fees and charges that are associated with the loan, even those ones not included in the comparison rate. Hope this helps. Until next time.
Comparison rates are a good starting point to be able to compare loans by cost, but remember, they're based on a number of assumptions that may or may not occur. So it's always a good idea to get your lender to explain all the fees and costs, even those not included in the comparison rate.